So I want to discuss here, if we look at history, it's amazing how much you can learn. So here's the SPY from 1996 to 2010. And you can see the support and resistance levels, support being on the bottom, resistance up being on top. As the price action hits the resistance, watch one's position, potentially getting out. And sure enough, you see that the price action went up as soon as it hits the previous support on the left of the screen. There are additional indications where the support should be. As you mark your charts for support, as the price action hits support, watch one's position potentially getting in. So you have a previous a resistance level as the price action cuts through the resistance becomes support. That's when you should get in. You ride this wave. Now it hits the price action hit its head on resistance and started going down. So ideally you could cut your position size or get out of the trade altogether. If you did that, now you can switch strategies and make money as it goes down. You get in again in the long buy position as it hits support and starts going up with confirmation, creating the the higher lows and the lower lows have stopped. Now you're getting higher highs and higher lows, indicating a new trend has started. You ride this wave, and again, we see it hits resistance, starts going down, the potential to get out slowly and then ultimately scale out of the position, change strategies, make money as the stock falls, the SPY falls, and then again we hit resistance again. And we get into the trade. So you bought, you ride the wave, you see that it's falling, you get out, switch strategies, make money as it goes down, buy again, and ride the wave and repeat. Now, this is important. A lot of people have not, if you were trying to retire during this period of time, look at what a roller coaster 1996 to 2010 is. It was just unbearable where you made money. If you didn't get out, this whole long-term hold nonsense, I totally disagree with. And this is exactly why. What happened is that if you had to retire in 1997 and you had a long-term hold, you made money, then you lost all the money and just broke even, then you had the same cycle again. I disagree with a long term hold. I think you should go in, make your money, switch strategies, and make money as the market's going up or down, regardless. If you don't know this strategy, I teach it in my upper tier course on Patreon, and I'm working on a website. So another if you don't want to do that, here's another option: getting in, riding the wave, if you will, and then possibly here getting out, sitting out of the market until you see new opportunity. That's another way of doing this.